Guys, welcome back to the Independent Investor Channel. My name is Ryan. Hopefully you were able to tune in to my video about the VTI, the Vanguard's Total Market Index, which is what I feel is the absolute best exchange-traded fund that you can invest in. I've had a lot of people come to me and say, can you invest in VTI exclusively? What other additional assets can you put in the portfolio? And I feel like there's a lot more focus on the products itself. And this is an error that I see all the time when people are looking to approach investing and they always just want to focus on the product. What if VTI goes down? Can I own VTI exclusively? What other products can I have with VTI? And I think there's such a more holistic view that you have to have as a self-directed investor. Guys, you have to remember that you're not going to be recommended ETF products, low cost, broad exposure to the stock market through a financial planner, okay? They don't recommend this stuff. So please understand and don't miss the point that many thinking heads out there in the investment community will agree that this is absolutely the best way of approaching the stock market. You don't need representation. You can enter into any of these passive products and succeed long-term in the stock market. But if you're coming to me and you want to know what the perfect portfolio is for a beginning investor, this is the perfect portfolio, all right? The Vanguard's Total Market Index and your exposure to BND, which is the Total Bond Market ETF, it's really just the flagship equivalent on the Vanguard's product offering for products that will get you exposure to the total bond market, all three, short-term, medium-term, long-term, and probably some extended duration bonds. It covers the entire bond market in its totality. It's an ETF that I personally own in multiple buckets in my personal portfolio. All right, you guys know that I obviously own the Vanguard's Total Index. But so many people hit me up and they're like, can I own VTI in the portfolio in and of itself? The short answer is yes, you can, okay? But all allocation models, all portfolio building allocation models would agree that just owning stock or equities within your portfolio exclusively is a fairly aggressive way to invest, okay? Here's the thing, if I'm talking to somebody who's 18, 19, 20, early 20s, mid 20s, let me ask a rhetorical question back to you. Can you take on this level of risk if you know that VTI is a diversified product that is meant to be passive in nature? Can you take on that level of risk in the market being as young as that you are? And I'll answer for you. I believe that you should be able to. And the question I get all the time is, what if we buy the ETF now and the market goes down? Many people are going to panic sell out of the market and be upset, and they're never going to invest again. Guys, listen, your fitness is something that I talk about all the time. Investing is a luxury. It is a luxury. It is not a necessity, okay? Now, I have my own personal opinions about the necessity of investing, but don't come to me and expect that if your fitness isn't suitable to enter into the stock market. What I mean by that is if your budget is out of control and you have way too much debt, unsecured debt through credit cards, okay? Don't start talking to me about what if this, what if that, what if the $1,000 starting portfolio you start goes down and the market goes down 50%. What am I going to do now? How am I going to put food on the table? That is extremely unfair to me, not only, but it's unfair to you, which is really the aim of this message, okay? If you take on this information from a knowledge perspective and you say, wow, this is really interesting. Ryan's talking about the perfect portfolio that anybody can start in the low to no cost brokerage options that we push out there through M1 Finance specifically and First Trade specifically, all right? Affiliates both on the Independent Investor channel. Links are in the description below. Go check them out. It's a no cost way of investing through this. But if you look at your in yourself and your fitness, and you look at yourself in the mirror and say, this is a great idea. I want to work toward this, but my fitness really isn't where it needs to be to give me the comfort level I need to seek out exposure in the stock market, okay? And these are some things that you have to be able to answer. Do not come to my channel and expect me to provide magic to you, okay? I'm gonna tell you right now, what if this VTI goes down? I'm gonna save you some trouble and tell you that it will go down. It will, okay? Please have fair expectations about what the stock market has to offer. These averages in VTI of just over 7% are year-over-year averages, okay? But the stock markets go up and stock markets go down. And if you do not have the fitness to enter into a product like VTI, all right, there's one of two things you can do. Either wait or control your level of exposure in this portfolio. For example, if your fitness is correct and you have savings and you have the budget under control, but you're just not sure about your own ability in the stock market, start with $100. Start with $500. I contend that there are so many people out there that are absolutely ripe or overdue to become an investor, to go from non-investor to investor, but they just don't know how, okay? This is your very key to the market, all right? It doesn't get any better offering or buying these low cost products, VTI at 0.03 and BND just a little more than that at 0.035. It doesn't get any better as far as putting you into a product that has the ability to make you money over time without consuming you in fees within your accounts, okay? The other thing that you can do to kind of control or try to seek your exposure but throttle back on the exposure rate that you have is to control your percentages in this portfolio. I've spoken about this on the channel many times. If you want to enter into VTI, don't enter your first $1,000 or first $500 exclusively into VTI. Use the BND as that buffer, okay, as that intermediate ETF, okay? These are a lot safer to enter into this. Both of these are diversified assets, but if you're afraid of the amount of exposure in VTI, start with a 50-50 portfolio, okay? Now this is really applicable to those folks that are 50 and older, okay? I use the 50-50 rule. If you're 50 years old, you should be working to have at least 50% of your assets in fixed equities, okay? Because we're looking to wealth preserve later on down the line. We're looking to preserve capital as opposed to grow capital, okay? So on the other end of the spectrum, if you're that 20-year-old investor and you're just not satisfied with getting your exposure here in VTI, whether it be that you think that the market is at an all-time high, which it is, okay, and you have $1,000 of investable capital, what's keeping you from taking 20% of that money and putting $200 into VTI at 100% clip, right? You're young enough, you can take the risk, you can set it up to dollar cost average into the market. But I was just hit with a question, what do these young investors do if VTI goes down? You look to buy more. This is not a secret. Okay? And I'm not going to come on here and sit here and tell you that panic selling is something that rational investors do. They don't. You have to have the mindset. There's no other choice. And there are going to be times during your investment career when you look at it and you say, ugh, the market's going down. This isn't very fun. And there's going to be times when you look at your account and go, what am I doing? Am I doing the right thing? And you're you second guess. I've been through all this stuff. I've been through all these psychological barriers that you have to be able to overcome if you're going to seek out this luxury and enjoy what I feel like is the very best beginning portfolio for a new investor. This is how you do it. Can you invest in the VTI exclusively? Can you invest in VTI with the market at an all-time high? Yes, but with a caveat to use some scale. Use your head, guys. It's not that hard to look at your own personal portfolios and say, you know what, Ryan makes a great point, but he's appealing to thousands of people through YouTube. Our exclusive situation is such that we don't want to take on that much risk to start. We want to dabble in the market a little bit, but we know the importance of investing. So we know that we're against the grid here a little bit in going from a non-investor to an investor. We want to invest, but we want to do it and we want to stay a little bit closer to the vest. Maybe you just parlay a little bit of your savings, man, maybe $1,000, and you put 800 into the account and you go ahead and invest that 20% like I'm talking about. Invest 10%. You're the boss of your own money. But that percentage of allocation to the market should be indicative of and reflective of your risk tolerance to the market, guys. So just in closing, use the BND as your fixed equities buffer, okay? BND is also offered on the Vanguard's website. I encourage everybody to look at the Vanguard's website as really being your shopping mall for ETF products that are available. Financial money managers are not going to recommend ETFs. They're way too low cost, and they don't get a kickback for recommending you get involved with passive assets. That's why there are record outflows right now of these garbage mutual funds that they've been sold on because the financial manager received a kickback to sell you that product. I'm not here to sell you anything, okay? I make no compensation whatsoever from you from providing this key access to new investors. If you hear me out, you'll be better for it. And I don't seek this out for compensation. I seek it out to provide you the truth in investing, and that's what we're looking to do. Empower one investor at a time to understand the low-cost truth about passive investing and taking control of your own money, guys. Thank you so much for tuning in to this video about the perfect portfolio for new investors. Hit the subscribe button, help us support the channel. Leave your comments at the bottom of the message. And if you know new investors out there, certainly young investors, old investors alike, who can benefit from this information, share the message with them, man. We're building the channel based on referral. All right, we're building the channel based on referral, and I would lean on you for your help in providing that referral for me. Guys, thank you so much for tuning in, and good luck in your investment future.